Hello, this is Brandon. Today is June 25th, 2024. It's about 11:05 a.m. as I make this video. And if you haven't seen my weekend preview video, please go ahead and watch that. This is a continuation, and I avoided trying to put titles like this, but I think it's time. So the title is Warning, Market Top. Divergences cannot be ignored, and the sell-off is starting. So here's the disclaimer. Please pause it, read it. You have to agree to this before you move forward. And of course, my shameless plug about my X.com, Galaxydoc Market. There's just a ton of things, insights, and commentaries that I myself and my colleagues around the web that I find interesting, that I post there, that's not available on YouTube. And also, if you're not a member, that's where a lot of the things that are delayed, that gets over there, but still very useful. All right, so basically, I want to focus on the housing market, which is wobbling, probably more than wobbling, but that now there's empirical evidence that the market is cratering and crashing. We talked about some of the homes that are for sale that are 25% below what these private equities have gobbled up. They've been doing that for the last 4 years. And I think the chickens are coming home to roost. And while the rents are rising because of, what, I'm not going to mention it here, but you guys probably know why the rents are rising. The housing markets are coming down because of the consumer demand destruction and ever rising interest rate. And there's bank instabilities. So housing market is in bigger trouble than what is led to believe in the mainstream markets, and so that's what I want to discuss also. There are divergences playing out now. They've been divergent for the last 3 to 4 weeks, and I've been very vigilant about painstakingly pointing those out. And then I want to talk about Costco, Comerica, and semiconductors, as well as some other stocks, as well as the divergences that we see and the key divergence indicators that we're seeing. Micron earnings today is going to be critical, so I will be talking about that very briefly. I think there's just better plays, especially in the field of Nvidia and ASML, which we're going to be talking about. Beyond that, I want to make sure that the message is out and clear that the market sell-off is going to be quick and it's going to be violent. And then it's going to set up for a nice summer rally headed into the elections. Okay, so here we go. So fear and greed index, and I've been talking about this as the market was hitting all-time highs, and we're still there. I mean, nothing really has changed. The fear and greed index is as fearful as the market is hitting all-time highs on declining breadth, declining momentum. And this is a clear-cut sign, folks, that the market sell-off is coming. And if you're the exit liquidity types that are buying every dips right now while the insiders are selling to you, then you have yourself to blame. But I am trying to save everybody from this anguish. But fear and greed index is at 41, and this usually goes in tandem with the market. If the market is high, then it's at extreme greed, and it's not. And we have not seen these since 2008 housing market crash. And I'm telling you, right before the Lehman and Bear Stearns crash. Here's some news around the Twitterverse or X.com verse. Zero Hedge, my trusty Zero Hedge. Great site. Go look at them, watch them, follow them. Medium new home sale prices and existing home sale prices are, it's an inflection point, right? And it's dropping below the median existing price for the new homes. Okay, so that is concerning, right? The new homes should be costing more than the existing homes, but that's not the case. Okay, and these are some of the divergences that people are ignoring about the housing markets. They think that because private equity, Warren Buffett, or whoever else, BlackRock, Blackstone, buying up residential real estate, but folks, these people will be selling these at fire sale prices, just not today or tomorrow, but soon. And also the new home sales have crashed in May, and this is significant because if you look at these levels that are being formulated here, the that hasn't happened, since a significant amount of sell-offs, and every one of these home housing weaknesses have led to sell-offs. Okay, so I mean, these are all the areas of selling that's happening while everybody thinks that the home prices are going to rise. I mean, I think there's somebody on YouTube that's talking about, I don't know, about buying homes in these luxury places, and talking about doing God's work, whatever. I think he's going to be wrong. Now, this one kind of infuriated me, so I had to kind of commentate. Inflationary damage is already done, and it's here. And I think this is kind of the disconnect that exists within our academia, within the press, and 16 just because 16 Nobel Prize winning economists warning a second Trump term would reignite inflation. Well, I think that's already here, and I don't think it matters whether Trump's in the office or Biden's in the office. Just look around, and I talked about the milk inflation, hashtag milk inflation. Go look it up, folks. It is a real thing. So why am I talking about all these? It's because I want to lead into these CMA, which is Comerica market action. And one of the striking things that I saw, and I talked about this on my weekend video, is on Friday, June 21st, the accumulation distribution line went just hyperbolic. And that is a sign of intervention, and also a sign of stress in the banking industry. Okay, do not ignore the FDIC when they were talking about these 63 banks that are in trouble, and I think Comerica is one of them. And so I stand behind that. And so it may not happen tomorrow or today, but I think the significant part of today's market action is going to be related to these banks. So watch these banks, folks. Even if you don't want to watch Comerica, then watch the KRE, which is the Regional Banking Index. All right, so the other thing that I wanted to talk about, over the last 2 weeks, the dollar and the 10-year Treasury, denoted by TNX here, has been diverging. While dollar was rising, TNX was coming down, and for good reason, right? TNX coming down is basically because of this fact right here, okay? TNX coming down is because of the fact that we have the Fed intervention or central bank interventions coming in, and that's something that we cannot ignore. And now we have a gap up higher, and I told you from the get-go that 4250 is a target by the Fed, and this is bearish. Okay, these moving in tandem together is not a good thing for the markets, folks. Okay, both rising dollar and TNX is negative for the markets, and I think a sell-off is coming. Okay. So let's talk about the divergences that are present galore and what's happening in real time as I make this video. Some of them have not been seen since 2008 financial crisis. We already talked about the fear and greed index, right? So when we look at the Dow transports, it's important to note the fact that Dow transports are still diverging. Transports, I know they've tried to make this breakout, and then we're now below this area, so we're basically diverging as the Dow Industrial is making higher highs. And that's the Dow theory, folks, and this has been warning you that something big is coming, and it is almost here, I believe. Okay, so that's something that you need to watch for. The weighted and unweighted SPX, this is something that we've been warning about, and so please pay attention. And I posted this on x.com. So you see that red candle. So this is the non-weighted, and so you can see the divergence as the weighted, the normal SPX is rising, and this is telling you a significant market dislocation is headed our way, and so ignore it at your own peril. So I want to just go in really quickly to let me just get these out of the way. Hold on. To the stocks in question. ASML, folks. This is, in real life time. This is the daily, and I've kind of talked about the presence of these head and shoulders formation and how we broke down from the neckline. It tested right into the ADMA, that green line right here, folks. That's very, very important. And so we tested it this morning. We're beginning to fail. And of course, this is a critical level right down here into 999. I think the logical areas that it's going to start testing for in the next couple of days when it gets impulsive is this entire area of the gap. And so the gap fill is down here. I'm not sure if it gets all the way there. I don't think it's going to happen unless something big news happens, but regardless, there's just basically complete divergences everywhere forming. Okay, Lulu. Why am I talking about Lulu? Okay, because I think Lulu is the one that you need to watch for because of the skew that's present. I know it's pulling back right now, and along with the rest of the markets, but I think when this is over, it's going to have a pretty profound rally. And because the daily looks pretty bearish, but at the same time, when we look at Lulu in terms of the weeklies, all right, the PPOADX is basically kissing each other. So what we're looking for is a effect where it just starts to diverge out, and that is going to create a rip your face off rally. It's just not right now, but you know, we can be patient about this. Okay, and so that's one thing that I'm sort of bullish about right now. Nvidia, let's look at Nvidia compared to Meta, Apple, and Tesla. Okay, and even there's some weakness. I thought Meta was diverging. That is basically not diverging. In fact, Meta is the only lone wolf that is not doing that at the moment. What we've got is basically Apple. It's continuing to remain strong, but below this uptrend line. Tesla is continuing to show weakness, but we did break up, sort of up from that uptrend line. And then we have the Nvidia, right? Nvidia is weak, folks. This has been what's been driving the markets higher. At one point, it was the most expensive stock, the most valuable stock that there is. And then I compare it to the Dow Transports. We already discussed that one. Okay, so there's just trouble brewing everywhere. And then let's look at Comerica. And I talked about this, and you saw my X.com post. Okay, folks, this kind of stuff is, you know, they don't even try to hide it anymore. When we got down to this 45, 46 level, when we get below this 45, it's going to sell off significantly. But now we've just kind of topped up. All it did was just buy some time for the banks, for the Fed to figure out what they're going to do. So this is kind of the real time. And I'm very bearish on Comerica. But it's going to take patience, and it's going to take some guts because you're fighting against a Fed who does not want to see banks fail right now ahead of the elections. The other one that is basically putting in a top is Costco. Okay, and I don't know why my things are lagging here, but Costco is on the daily very, very divergent. Okay, we found some support off the 20 SMA. It didn't quite hit it, but that's where it's going. And then it may go as high as this downtrend line, but I believe the next move is going to be down. MACD has already signaled that. And then, of course, when you look at the weekly, we had a tail candle. It's trying to back test into that area. I think it's pretty imminent that by the end of this week, we can see it coming down into the 824 to 808 level, and that's very, very possible. So Costco has been moving more parabolic than Nvidia has, and so that's very important to note at the moment. Okay, so let's see what's going on currently. So currently, the main stocks that I'm watching, ASML, kind of trying to regain, just chopping around, building strength, I believe, to make a lower movement. Nvidia obviously just sold off and just hit a critical level, and it's going to test right into this area. These are the main signal level. Lulu has come down, making a little bear flag. Maybe it goes down a little bit more, but I believe we're going higher on that one. Federal Express, don't let their blowout earnings fool you. It's based on fuel hedging and some accounting gimmickry. But if the market continues to sell off, what a great place. As long we know where we're wrong, around 297. It's a great place to add some shorts. AMC. Okay, so this is part of my $73 challenge. I'm going to tell you, there's 2 days left. I think that this one's going to be blown, and we'll do another one. But for those of you out there, give me some insights from what you think, and then maybe I will use it. I've also put a challenge out to our members to do that, and then we'll do our technical analysis. Analysis coming on why this trade is potentially going to fail, and we know why. All right, but it's something fun that we're doing as a group, just to basically show you, even in losing trades, there's something to be learned. Now, CMA has been selling off, and we just found a little bit of a bottom, and it's basically just bouncing at the moment. But I think the trajectory is continuing down. You got to be patient with the CMA. Airbnb is another sector that is rotating out, and all the hotels and casino stocks are basically bearish at the moment. Okay, so that's something we want to look. Restoration Hardware, okay, I know it's getting oversold, but it has some unfinished business down into that area, and I believe we're going to hit it. And so that's something that I wanted to point out. Costco topping, okay, it's basically putting in a head and shoulders off of the, not much you can tell about the 1 minute chart, but it is basically doing that. And as you saw the chart on the weekly and daily, I think we're going lower, and Costco insiders are selling as we speak. So as you can see, there are divergences everywhere that we've been following, and so that's kind of message I want to get out across to everybody, that the market top is in, folks, and but it's not going to be a crash per se, but it's going to be a steep sell-off. It's going to be violent. It'll be quick. So the keys to next week, well, this week, not next week. I apologize for that. U.S. dollar and 10-year Treasury, as long as they move in tandem, both are rising, is bearish for the markets, and it's an ominous sign. And you know that there is intervention. Those of you that don't say that this market is not managed, okay, I got a bridge to sell you in Alaska. All right, fear and greed index continues to diverge against the markets. We're watching and trading Costco semis, KRE, Nvidia, and Costco are the ones to watch. Watch the housing market and regional banks. Those are related, and regional banks also have significant exposure to the commercial real estate, and Comerica is one of those. It's toxic as hell. We're watching and trading Nvidia, watching MU earnings, ASML, Costco, CMA, and KRE, among other ones that we're looking at, but these are the things that you want to pay attention to. Sell-off will be sharp and quick, so you need to be looking for candidates for the bounce, and my favorite is Lulu, RH, Tesla. Patience on these, right? It's not going to go up right now, but you got to be building your positions, okay? And but it's also at these moments that you're going to have rip your face off rallies. So the other thing is that I haven't mentioned here is, that our memberships are going to know. We're also short on SPY. I think there's some significant opportunities for easy money to be made on the SPY. And, if you want to learn more about that, then you're going to have to follow us on Galaxydoc Markets, and then like us, share us, and comment, and subscribe, obviously. If you want to join our group, and we do have a unadvertised social media special for you guys to kind of find out, if you're looking for some great place to learn and hone your trading skills and get some crackerjack market analysis, now's the time to do it. Okay, and you need to email me at coachbrandon@protonmail.com. Otherwise, let's get some alpha, and I'll talk to you later. And market's coming down, folks.